Chinese stocks are in free fall, down more than 30% in a month. Why? It was a classic bubble. They went too far too fast earlier in the year. Chinese stocks are actually still up in 2015. Many investors got duped into thinking that Chinese stocks were a can't miss situation. The government was going to keep stimulating the economy. How could things go wrong? That's bad thinking. That's a bubble in action.
A number of moves by the Chinese government to try to stop the sell-off, with pledges to buy tens of billions of dollars in shares, with the suspension of IPOs here, with interest rate cuts as well. And that just hasn't stopped the bleeding. This is ordinary Chinese people, people who may not have a university degree, who may be a taxi driver or a housewife. Many of these people borrowed money to invest in the stock market when it was the fastest growing stock market in the world, and some of these people are now in danger of losing everything.
Half the shares on the Shanghai and the Shenzhen stock exchanges, these are the two main stock exchanges, have now been suspended with no better reason than there's too much market volatility, so we're closing shop. We're literally freezing our investors in, so they can't even get out now if they want to. It is a bloodbath out there, no doubt about it. We didn't see it when it happened in the financial crisis in the US or in Europe, but we are seeing it happen in China. That is going to push back this whole effort by China to say, look, we're opening up to market forces, to more liberal economics.
What does all this mean for your money? Stocks in the U.S. have taken a hit with all the global uncertainty, and you're going to see that in your 401k, but don't freak out. Investors in the U.S. don't have a lot of exposure to markets in China, and the drop in U.S. stocks could spark a buying opportunity. There are a number of big Chinese companies that trade right here at the NYSE and at the NASDAQ, and most have tanked over the past few weeks and could produce nice returns for investors willing to deal with the volatility in the U.S. market right now.
What does this mean to the global economy? It's not yet certain. China's economy is the world's second largest, and it's also the second biggest trading partner to the US and Europe. Here's the problem. If China's stock market is just plunging because unsophisticated investors got too greedy, that might just be a bubble like in 2000. Remember that recession? Wasn't that bad after the dot-com bubble burst. But if China's economy is really slowing and that's causing this market crash, that could be more like 2008, and that would be awful.